Did you know that almost all nonprofits need to file a 990 informational return annually with the IRS? There are a few exceptions for religious organizations such as churches, synagogues, and mosques, and for organizations that raise less than $50,000 in cash receipts during the year. But in most parts, not for profit organizations need to file this return annually, the same way other businesses file their corporate or partnership returns. Not filing your IRS Form 990 could result in significant penalties as well as a revocation of your exempt status. Hi, I'm Joe Blatt, and welcome to Joe Talks Nonprofits. And today's episode, we will dive into the IRS Form 990. Even though nonprofit organizations are exempt from income tax, they still have an obligation to report their activities to the IRS. The IRS Form 990 is an informational return rather than a tax return, since it provides a lot of information to the IRS on how the organization has operated over the past fiscal year. Since nonprofit organizations are public interest organizations, the 990 is considered a public document, which means, except for certain donor information, which is confidential, all the rest of the return is available to the public. This form can be accessed through IRS tax exempt organization search, which is the official IRS database, as well as GuideStar, ProPublica, and Charity Navigator. And I will leave a link in this podcast so you can access it easily as well. It is also very often available through the organization's website or upon request if you reach out to the accounting department and ask to see a copy. The 990 is the most accessible information a third party can access to investigate a nonprofit organization's activities. Reporters and watchdog agencies frequently review the 990 and use it to evaluate and compare nonprofit organizations to its peers. At least once a year, I'll see a report in a local newspaper about the nonprofit industry showing the salaries of executive directors or heads of schools included in it. Learning how to read the 990 is important if you are active in this industry. It contains a lot of useful information, and if you know how to read it, it can show red flags if there are problems. Let's familiarize ourselves with the form itself. The 990 is a 12-page core document that adds on multiple sets of schedules depending on how the organization answers certain questions. It's not unusual for a 990 to be 40 to 50 pages long once the core document starts with certain basic information, the balance sheet, income and expenses, and net assets. The cover page summarizes these numbers with comparative numbers from the prior year. This is to help the reader. Unlike a tax return, the 990 is meant to dig deeper into the mission and programs of the organization, asking questions about each of its major programs, how much was spent on program activities, and how much was raised from program related revenues. So, for example, if we were operating a school, how much revenues were generated by tuition income? Tax returns, on the other hand, are concerned with one thing: how much taxable earnings did you earn, and how much taxes are due to the IRS? I'm going to focus on some key data points you should look at when you're reviewing your organization's 990. First, let's focus on the form itself, and then we'll touch on some of the schedules in our second half of the session. The first page of the form gives you some comparative data, including summarized balance sheets and income statements over the past 2 years for trending purposes. It gives you the principal office of the nonprofit organization, their website. It also shows you who signed the return and who prepared it. The first page is meant to be a dashboard of what the IRS considers most important to the reader. The 990 continues on the second page with its mission and a description of its major programs and accomplishments. This is important as a reader. It can give you perspective into what the organization does, how much they spend on their key programs, and how much did they raise in services relating to revenues from outsiders. You can generally see the gaps here on what they took in from programmatic revenues as it relates to how much the cost of the programs were, and the difference is generally coming from contributions. Pages 3 and 4 ask a series of questions that, if answered yes, will lead to additional schedules being added in the back of the 990. So, for example, If you raised contributions, it'll require you to file Schedule B, which will list out all the major donors that have contributed to the organization. This schedule is the only schedule that is not available to the public in order to maintain donor confidentiality. The schedules start with Schedule A and continue up to Schedule R if needed. If you are the CFO and reviewing the 990, read through this carefully. A lot of times, the preparer may use prior experience with your organization to complete it and may not be familiar with what happened during the day to day operations. For example, if you received a land easement or did certain new lobbying activities that you didn't do in the past, this may be missed by the preparer. Missing this could result in an incomplete filing. The next part of the 990 is mostly compliance type questions, including the number of employees and contractors the organization used and whether you've complied with certain tax reportings, including the W 2 requirements and 1099 filings. Again, make sure you're in compliance. If you're not, this is something you should fix as soon as possible. On page 6 of the return, it continues with a series of governance related questions on the number of board members, the number of independent board members. The governance section continues with questions around conflicts of interest, fraud that may have occurred during the year, changes in governing documents. The two sections below relate to policies and disclosures. Policy questions include best practices in the minds of the IRS, so answering no may raise a red flag. As a board member or a third party reading the 990, this page of the 990 is important. So I would read each question and answer slowly before moving on. Ask questions when you're not sure. It's good governance. The Form 990 on page 7 lists out the full list of board members and key management and their compensation. What is interesting here is regardless of the organization's fiscal year end, the salaries and benefits are on a calendar year. So a June 30th, 2025 990 will show the salaries for the year ended December 31st, 2024. This allows you to compare apples to apples when you compare 990s for key positions. The 990 is also required to show compensation from related organizations for these same employees. So if the CEO operates three related not for profit organizations, for example, a hospital and a separate foundation and maybe a clinic, his or her compensation would be reflected in one place in the 990. Similarly, it shows the five highest compensated contractors based on a December 31st year end. So if the compensating numbers look wrong or a board member's name is missing, you should discuss this with the CFO. If the salaries are below $100,000 for non officers, they may not appear in the 990. In addition, sometimes the preparer may not have updated board lists and instead carried over a board list from a prior year. So this is why you should be diligent in reviewing the board list. Page 9 of the return is an important page to the IRS. This page shows the organization's sources of revenues. The columns are divided up into the different revenues, starting with mission based revenue, which is exempt from income tax. It's then followed by unrelated revenues, which are taxable at a corporate tax rate. And then it shows certain other revenues, which are excluded from tax based on certain sections of the tax code. Line 1 starts with contributions, government grants, fundraising events, and other similar donations. These, by their nature, are not subject to tax. Line 2 is program related revenues. These are mission based earned revenues from client charges or third party payers. Some examples would be tuition from students, hospital or clinic charges to patients, and their insurance carriers. The next section of revenue below are generally non mission based, but common sources of revenues that nonprofits receive, such as investment income from their bank and investment accounts, rental revenues from properties they may own, special event revenues. Many of these items are tax exempt in most cases, but depending on certain circumstances, may be taxable. If you're planning to develop a new form of revenue, it's important to to your tax accountant. Improperly classifying these items as tax exempt, if they are determined to be taxable, could result in significant interest and penalties in the long run. Also, how you structure the new business line may change how it is viewed by the IRS. For example, debt financed rental income is taxable, while non debt financed rental income is not. The next section of the 990 on page 10 is the organization's functional expenses. This shows how the organization spent their money, how much of their expenses were program related, and how much was supporting services such as management in general and fundraising. Many watchdog agencies look at this percentage to make sure that the most of the expenses are spent on program related activities. Depending on the type of nonprofit organization you operate, will depend on how much you will be spending on supporting services. A fundraising organization, for example, may spend more on supporting services than a hospital or clinic. The page also breaks out what type of expenses you spent your money on. For example, salaries, benefits, grants, or other expenses. When compared to prior year 990, it can show trends on where costs are increasing or decreasing. As a board member, if you don't have audited financial statements, these last couple of pages are a great source of information. I would use this to get an understanding of your revenue streams and how you spend your money. If program expenses are below 80% of total expenses, I think you should have a conversation with management to explain the rationale. There may be some inefficiencies that need to be corrected. The following page is the balance sheet, which compares numbers from the current year to the prior year. This is helpful in determining liquidity. The last page of the 990 ties together the revenues and expenses and any other items that were not reported elsewhere in the return, such as unrealized gains or losses on investments, prior year changes in net assets, and things of that nature. This is important for the reader as well to make sure they have a whole picture of the current year's changes in net assets. The last section of the 990 on page 12 provides information about financial reporting. This is where you should be able to see whether the organization had an audit or a review of their financial statements, whether it was subject to federal audit requirements such as uniform guidance, and whether the board or a committee of the board is reviewing the annual audit. The IRS doesn't require nonprofits to have an audit, but some states and regulators do. And I think it's good governance personally to require this as well. So this is the basic 990. We'll go through the schedules in the second half of the session, but a few takeaways before we do that. As a board member, this is your return. The 990 is a public document, so others around you are reviewing it, so you should do so as well. As a CFO, you should make sure that the information provided is correct. The IRS performs desk audits of the data that's in the 990 periodically, and you don't want them to find any mistakes. This will only lead to more scrutiny. Filing returns late or not at all is a red flag to the IRS and third parties, including funders. In many cases, this could lose you grants or donations before you even get started. The schedules of the 990 vary based on the questions you answered earlier. Each of the schedules have a specific purpose and are more targeted to certain types of nonprofit organizations. Schedule A is completed for all 501c3 charities, which is the most common type of nonprofits. These are the ones we're discussing above. Since these organizations are exempt from tax and allow for tax deductible contributions, the IRS has the most scrutiny over them. If your organization is exempt based on receiving substantial support from the general public and the government, then they require you to show what percentage of that support actually came in from these groups. It is on a 5-year average, so no one year should cause a material deviation. These organizations need to make sure that at least 33% or one third of their funding continues to come from the general public or government contracts. Organizations could run into trouble when they rely on investment income to sustain them or a few major donors and stop fundraising from the general public. Monitoring this schedule is important to make sure your organization isn't slipping close to the threshold. I have seen this happen in a lot of organizations get complacent and stop soliciting contributions or rely heavily on only a few major donors. Schedule B is a list of all donors who gave to the organization $5,000 or greater. There are some exceptions here, but in generally, that's the base. This schedule is confidential and not open to the public. It is sent to the IRS, but not shared with others. Some states have tried to open it up to the public, but so far all have failed. If you are the CFO of your organization, make sure you have two copies of your 990 on file, one with Schedule B and one without. Occasionally, you may be requested to give a copy to a third party, and you want to make sure you don't send the wrong one. I have seen the wrong ones posted on the organization's website or given out to funders accidentally. Schedule C is political campaigns and lobbying activities. This schedule is used to inform the government of any political activities the organization may be involved in. 501c3 organizations, those we spoke about earlier, are prohibited from certain types of political activity, such as endorsing a candidate or lobbying on behalf of or against a specific candidate. We can't use organizations' funds to donate to political campaigns or political action committees. These types of activities could result in the revocation of the nonprofit's tax exempt status. This is especially dangerous during election time. Many politicians try to get nonprofits to endorse them or get them in front of their groups. On the other hand, charities can do some direct lobbying for legislation and some grassroots lobbying, which is reaching out to the base to support legislation. Both need to be tracked separately and reported to the IRS. If your organization is doing any of this, it should dive deeper into the issue and clearly understand the requirements. I would recommend discussing this with your outside accountants and attorneys to make sure you don't put your organization at risk. I'll make a separate episode on lobbying since this is an important topic. Schedule D is supplemental information for financial information, including endowment activities, land easements, and a clear reconciliation of the audited financial statements. Before this reconciliation was added to the 990, I received a lot of calls from clients asking me to help them reconcile the numbers that are reported as total revenues and total expenses on the 990 to those that are on the financial statements. And the adding of this schedule by the IRS alleviated that issue and really is helpful for many organizations to understand. Schedule E is specific to schools. During my years in public accounting, I worked closely with many independent and charter schools and walked them through this schedule to make sure they understood this form clearly. Most of the form deals with questions on non discrimination policies, as well as tracking the ethnicity of students, faculty, and staff. Well, the last couple of questions ask about government financial aid to the school, as well as require the school to certify to the accuracy of this form. If you answered in Schedule A that you are a school, you should read this form carefully before certifying. Schedule G is required for organizations that does fundraising. The first part looks at whether you used a professional fundraiser to help solicit funds. This allows the IRS and local states to verify if the professional fundraiser is registered to solicit contributions. In addition, the IRS can trace a person or entity that is flagged by the IRS for fraud or other discreditable acts to all their major clients. The second part lists out your organization's special events and breaks out and expenses by those funds that were deductible versus non deductible payments, and then expenses by major category. This allows the IRS to compare for reasonableness of the amount that's considered deductible versus non deductible for a specific event. Also, for gaming activities, the revenues earned versus the expense paid. Gaming activities are regulated by most states, and this information can be useful in determining if the organization is following state guidelines. If you are a board member, review this schedule well and don't hesitate to ask questions of management if you don't see an event you attended or gaming activities you're aware of. If they are using a professional fundraiser, ask if they are registered. I will go further into this in future episodes because professional fundraising rules and gaming information is something that the IRS looks at significantly here. For now, just know these rules can be complicated and not following them can get your organization in trouble. Schedule I is used for grants your organization gives out to individuals or other nonprofit organizations. This includes financial aid to students, financial assistance to the poor, or grants to other nonprofits. If grants or financial aid is given out, the IRS wants to make sure it's given out fairly. They ask you to describe your process for determining eligibility and how the recipients are approved and the funds are monitored. If your organization gives out grants, this is a good question you should be asking as well. Schedule J is supplemental information on compensation. Here, the IRS looks for red flags. They ask whether the key employees or board members receive first class travel, housing allowances, health club memberships or social club memberships, and various other perks. If they do, they want to understand the business purposes of these types of expenses. They are also looking for written policy guidance relating to these types of transactions. For the CEO, they want to make sure that his or her compensation is reasonable based on what other similar positions earn and look to see how the board determined it was reasonable. This could include reviewing of other 990s, compensation studies, or surveys. They also expand on the compensation numbers here, breaking it out in more detail, including bonuses and retirement payments. As a board member, you should review this schedule and ask questions when answers don't seem to be correct or look like a red flag. For example, if the CEO's compensation is higher than you expected, or there is no transparency into how it was calculated. Schedule M is a commonly used schedule as well. It breaks out the non cash contributions by type. It also asks questions about Form 8283. If you saw my podcast on non cash contributions, you may remember that certain higher value gifts require the nonprofit to sign an 8283 from the donor and what the nonprofit is committing to do for the IRS if any of these items are sold within 3 years of the time they are donated. The IRS also asks about whether the organization has a gift acceptance policy and whether the organization used a third party to either solicit, process, or sell non cash contributions. All good questions you should be asking as well. I skipped a lot of the other schedules, which may or may not be filed as part of your organization's 990. If there are any schedules you want me to discuss, please feel free to leave a message or email me. A few takeaways before we wrap up. If you're a board member, you should review your organization's 990. It's a public facing document and represents you not only to the IRS, but also to donors and funders. Ask questions of management, especially in areas where you may have answered no to certain types of governance related questions. So, if you answer no to a gift acceptance policy, ask why you don't have one. If you're a member of management, make sure you review the questions in Part 4 of the 990, which lists out the required schedules. You are the only ones who will know whether this is wrong. I hope you found this podcast helpful. If you did, please share it with colleagues and subscribe to my channel and podcast. This podcast is intended for informational and educational purposes only and does not constitute legal, accounting, tax, or other professional advice. Listeners should consult with their professional advisors regarding their specific circumstances. I'm Joe Blatt. and you've been listening to Joe Talks Nonprofits. If you like this podcast, please like and subscribe. I'll continue to produce weekly podcasts to help educate nonprofit leaders and their boards. Thank you, and hope to join me in future podcasts as well.